Hello, my name is Matt Shortall, and I'd like to take 5 minutes of your time to discuss whether Tesla stock is well positioned to make an upward move with support. Over the past few years, Tesla stock has seen some of the largest moves, both positively and negatively, causing quite a stir and facilitating several points of conversation and contention. I've personally held Tesla stock at various times and have a great interest in its volatility. This time series analysis was conducted as a project at the University of Maryland Global Campus for the Data 620 class, section 9040, during the summer of 2023 trimester. It was completed under the guidance of Professor Carrie Beam. And with that, let's take a look at the data. The first figure we'll look at is the current state of the stock so that we can gather a baseline for our continued analysis throughout the time series. The graph at the top shows a stock price and trend with confidence bands, whereby the stock price is shown as a linear graph in blue. From 2010 to 2019, we observe a small but slight increase over time, whereby in 2019 and 2020, there's a steep increase, followed by a very steep decrease in 2021 to 2022. This overall shows a positive trend with the current price within confidence bands, as displayed by the forecasted trend line, which is a linear trend line shown in gray. The stock price did exceed the upper confidence band in 2020 and into 2021, but it does fall within the confidence bands even after the drastic decrease from 2021 to 2022. The stock price Bollinger Band chart shown below shows the same linear stock price graph that we discussed. However, we've added a moving average line, which is calculated as the average stock price over a look-back period of 10 years, and Bollinger Bands, both upper and lower, which are two standard deviations from the moving average. Here we can see that over the course of 2010 to 2019, the average stock price falls within the Bollinger Bands as denoted by the blue color. From 2019 to 2021, the stock price rises above the upper Bollinger Band as denoted by the red coloring. And in 2021, the stock price falls back within the Bollinger Bands down to $123.20 and nears the moving average line. At this point, the moving average is still on an upward trend, and the stock price remains higher than the moving average. So the current state seems to indicate an upward trend, and the current state of the stock is still above the moving average. But let's see what the forecasts say. The stock price forecast chart at the top of figure 2 shows the same linear graph that we've already discussed. However, here we've added the forecast with confidence intervals displayed. Here we can observe that the forecasted stock price after 2022 of a price of $123.20 is forecasted to increase to $182. This price is consistent with the trend line that we already discussed, though slightly below. The confidence intervals are quite large, and I think that this is due to the large variance over the last 3 years of collected data. Given that we've already established that the stock price is higher than the moving average, this forecast does seem to support an upward increase, and it does carry a confidence level that I agree with. The market capitalization forecast, shown below, is an indicator commonly used to establish the health of a company and would absolutely support an upward trend in the stock price because market capitalization is calculated as the stock price times the number of outstanding shares a company has offered. Market capitalization forecast graph shows that, like the stock price forecast, we observe a steady but slow upward trend from the years 2010 to 2019, followed by the drastic increase and decreases between 2020 and 2022. Like the stock price forecast, the market capitalization forecast for 2023 also shows an upward trend, supporting an upward move with support for the Tesla stock. Figure 3 shows the earnings growth over the same period of time, where the linear graph in orange depicts the revenue, and the bar graph shows the net income and net loss. What's interesting here is that the revenue has continued to see increased growth over the whole duration, and pretty substantial at that. While the Tesla stock price was increasing from 2010 to 2019, the company as a whole was still observing a net loss over the whole period. It wasn't until 2020, as noted here, that Tesla ever saw its first positive earnings. The net income shown in 2021 and 2022 also shows an upward trend, supporting a healthy upward stock move. But let's also step away from monetary values and look at actual physical supporting assets. In Figure 4, we show the global vehicle sales by year, the global superchargers by year, and the annual number of employees by year. Figure 4 shows the global vehicle sales by year, which is the number of Tesla vehicles that have been delivered during the period of observation. The global superchargers by year, which observes the number of superchargers that are installed and maintained by the company globally. And the annual number of employees by year, which shows a constant growth over time as the company continues to expand its footprint throughout the world. Each chart speaks to a common theme, in that Tesla is observing an increase year over year in each of these supporting asset areas. Forecasts were also added to each supporting asset area, and each forecast across the areas shows continued growth. We've seen support for forecasted growth throughout the time series, but let's take a look at something that's not forecasted to grow. The cost of lithium-ion batteries. Batteries are the single most expensive component of an electric vehicle. The chart shows that from 2010 to 2022, the cost to produce lithium-ion batteries decreased by nearly 80%. This substantial decrease makes electronic vehicle batteries more affordable to manufacturers, whereby they can produce vehicles at a cheaper cost and pass those savings to the consumer. Tesla announced plans in 2021 to do just that, by delivering an electronic vehicle that would cost $25,000, making it its cheapest model yet. This added affordability, combined with government pressure on emissions, may just support a healthy outlook with increased vehicle sales, increased vehicle production, and overall increased revenues. In the end, as with all stocks, there can be periods of volatility and downright uncertainty. However, calculated forecasts, revenue, reduced battery costs, and supporting assets all seem to indicate that an increase in the price of Tesla stock may be likely over the next year and potentially beyond. If you're holding Tesla stock like me, you're hoping that these forecasts come to fruition. Thank you for your time. Have a great day.